Everybody, this is John and welcome to the free video. And for tonight, we're going to take a look starting off with the Qs. So believe it or not, we had an awesome week last week, but ultimately all we did was rally to the top of this current trend line. So we're still in a downtrend on a daily chart within a weekly uptrend, okay? And what this means is that we're going to have cross currents and we're going to have volatility. Okay, so how do we combat stuff like this? Well, if you're going to focus on the long side of stocks, focus on the strong stocks. Okay, CMG, it's got a weekly squeeze that's triggered long. Okay, on the daily, it's consolidating. That makes sense. If you're going to focus on weaker stocks, or if you're going to focus on the short side, focus on stocks that are having a tougher time. Well, actually, LinkedIn's a bad example of this, but this is one that I've been following in terms of one that would follow more of the markets, because you can see that it hasn't been trending, it's been trading sideways. I'll show you the setup that I did on that. In terms of a weak stock, something like Priceline, okay, this is not something I'm going to buy. This is something I'm going to sell call credit spreads on, okay? And that's a big part of that. So let's go through and look at the portfolio real quick. So part of what I wanted to do is at the end of last year, well, not that long ago, at the end of December, did a survey of everybody in like the trading room and the silver plan and stuff like that. And it said, what are you interested in? And the number one answer, like resoundingly, was consistency. Okay. So what I did is I set up an account just for what I would call, for lack of a better term, consistency, and that this is the account that I would use in the room and for the silver trade and for anything that I texted out, okay? And I'd get a more modest size account, started off with, I think it was 100 and maybe 56K or something like that, move some money out. And the goal now has just been consistency, okay? And you can see, hey, look, I haven't done a ton of trading. That's my commissions year to date for options, and there's for futures, which were used kind of in a case of hedges and stuff like that. And we can see very clearly what positions that I have on, and with a goal of risking no more than 2% per trade, set up at right now up $32,000. Started off with like I think it was $156,000 or whatever that adds up to be. But the goal with this is simply consistency with the idea of the occasional home run, okay? So what kind of trades and what kind of position size am I using to get consistency? Well, does that mean don't do risky earnings trades? And it's like, no. So we did the 110-107 put spread, but you'll note that the risk reward is very acceptable, okay? Contract size, the credit was $1.37, $3 spread. So if Apple would have crashed, it would have been a very acceptable risk, okay? Same thing, we did that on Starbucks, last week for an earnings trade as well. What about CMG? Well, CMG we did as a diagonal last week, okay? So we sold the 715 call last week and we collected all that profit. This week, sold the 725 today when it was down a little bit, so you can see that this one's kind of down now. We still got an open profit of $2,000, okay? And by adding this on, we've reduced our overall exposure. We've capped our gain, but remember, with consistency, we are looking for opportunities to create a consistent equity curve without getting hit in the face, okay? In a perfect world, what would happen is that CMG, well, it actually doesn't matter. CMG could go to 730, and we're still going to make a nice profit on this trade. With the main risk being that this thing just falls apart, right? Which is what we got to look at. And then for LinkedIn, we structured a trade in such a way as to also limit risk. And this one, the way it triggered with the setup is that we did both a put credit spread and a call credit and a call debit spread. Call credit spread and a put debit spread that expired this week. There was a specific formula for doing this based on the setup and based on our goal of what? Consistency. Okay, so of all the topics in terms of getting that last year, that was the biggest topic by far, was consistency. And it's been interesting now that I've been doing trades in a specific consistent way in the trading room, it's just getting a lot of questions. It's like, okay, well, which trade setups do you do? Like, why do you pick debit spreads sometimes over put credit spreads? And why sometimes do you do straight out options? Okay. And then how much do you risk per trade? How much of your account do you use? Like, any given time, how many trades you're going to have? How much of your account are you going to are you going to tie up? What about hedging? You know, different things like that. And so what I'm going to do is I'm going to do a class on Saturday, January 31st from 2 to 6 o'clock East Coast time. And this will be, I think this is a very fair price, $297, to get all of this data and all this information. This is essentially a cumulative lifelong learning experience for me, and it's pounding it into this 4-hour class where, of course, I'll be able to answer questions with the goal being consistency. And a lot of times people think like, oh, okay, consistency, that's boring, right? Because consistency means what? You're trying to get 10% a year or something like that. And nothing could be further from the truth. In my experience in looking at this and in back testing and looking at my own trading journals over the years, if you have the right mindset and the right setups, you can set up a realistic trading plan. Okay, you do not have to trade all the time. In fact, I do not trade on Monday or Friday, and I've only been trading 1 hour a day on Tuesday, Wednesday, and Thursday. Okay, to get a 2.3% return on equity per week. Okay, now for some people this seems too aggressive, and some it may seem boring because, like, you know, if you only got a $10,000 account to start with, and you're like $230. Well, boy, I could have bought a bunch of contracts and made maybe $2,000. The thing about you got to remember, and the key with consistency is the idea of compounding over time, because 2.3% a week over time does add up. Now, if you've got a $10,000 account, yeah, in the first year, you'd end up with $22,000, but the next year you'd have $48,000, the next year $106,000, and then $234,000, and then $515,000, and then $1 million. Okay, that's actually very doable if you get the right mindset. Okay, for consistency, and you know which setups are the best for consistency. And more importantly, when you look at a setup, knowing like, okay, on this one, I need to do an at-the-money debit spread, or on this one, I need to sell an out-of-the-money put credit spread, or on this earnings trade, I need to pass on it because it does not fit this profile, but this earnings trade is okay. All right, so that's all the kind of stuff that I want to talk about. So what I'll be talking about is how to create a consistent equity curve so you can get off the roller coaster and sleep at night. Okay, part of my goal for 2015 is that I spend more time with my kids. This means not waking up in the morning and trading, not looking at the computer Sunday night and doing futures. Okay, so I'm setting up my own trading in such a way to get consistency so I can spend more time with my kids. Okay, what is the best setups? Oh, and so you can sleep at night too. What are the best setups for a consistent equity curve? So you know step by step what to trade. What are the best option strategies on those setups so you can play for a consistent equity curve? So, you know, a daily squeeze might be great, but do you want to do an in-the-money Delta 70 option, or an out-of-the-money option, or an at-the-money put credit spread, or a call debit spread? Depending on the setup, each one's going to be better than the other one, and that's what I want to go through with you. From here. So here's a couple things I want to talk about too, because this is important. If your main goal is consistency, then there are some setups that you need to stop using. Just get over it and move on. How to also stock the occasional home run trade so you don't miss out on equity curve spikes. Just because you're going for consistency doesn't mean that you won't have the occasional home run, okay? How and when to hedge your portfolio to maintain a consistent equity curve. The key with this here is, you know, if you've got a balance of $10,000, right, and you've got $3,000 worth of exposure, and the market falls out of bed, how can you hedge in such a way so that when your positions are falling apart, your hedge is going up so that your net liquidating value doesn't actually really change? That's the genius of hedging and the magic of consistency, okay? The pros and cons of using those strategies. Let's go down here. How to think about risk versus reward in a way that will completely change your mind about the markets. Okay, you got to get the right mindset. What are the top 3 hidden destructive patterns that undermine your goal to be a consistent trader? And then at the end of it too, you know, a lot of times when I've talked to people at the end of something like this, they're like, you know what, John, that was a lot of great information. I just really want one thing to do. So great. I will show you, if you were just going to pick one strategy to try to go for 120% annual return, I will highlight that one. And then bonus number 2, it's time to update the bigger picture outlook. Okay. back at the end in November, I said that the US dollar was going to get to 95 by June. Well, here it is in January, and we already hit that target. Okay, so what does that mean for the rest of the year? What's going on with the bonds? Now, Europe's announced QE. They're going to do $1 trillion over the next year in QE. What's that going to happen? There's all kinds of crazy things that's going to impact, and we're going to spend some time talking about that as well. Okay, so long story short, this will be a $297 class. Very reasonable. When we get it added to the site, it will go up at the list price. If you're getting this, of course, do it at the $297, and we'll go through. And I'm super excited about this class. For me, not only does it address a lot of things in my own personal life, but it also, in terms of having more time with my kids, but it also ties in the best of the best in terms of what I know about trading, what I can share about trading, and what I can do to help you get on a path of consistency so you can sleep at night and have confidence in your trading ability. Okay, so I'm super, super, super looking forward to this class. All right, you guys have a great night, and we'll see you at the next update.